So this quarter that just ended, which would have been Q4 of 2024, the Caribbean Growth Fund fell by 5%, while the World Growth Fund declined 8%. Following the US elections, there were some immediate reactions from investors regarding potential policies to come. Our US holdings underperformed the broader market and declined generally. This included our core US equity fund as well as the individual positions in the growth fund, such as Berkshire Hathaway, the biotech ETF, and Johnson & Johnson. Overall, the healthcare and biotech sectors in the US were notably weaker this quarter, and this was in the aftermath of the election. Additionally, expectations surrounding the America First policies and tariffs led to declines in non-US holdings, both in local currencies and when converted to USD. International and emerging market equities fell between 8 to 10%, and with international currencies falling between 6 to 9% against the USD. So most of the decline that we felt in international and emerging market equities came mainly from the currency weakness of those currencies against the USD. Caribbean holdings remained flat or were slightly higher over the quarter, and this helped to offset some of the global equity weakness that we felt in the Caribbean Growth Fund, but not enough to shelter the fund totally from the weakness. The US election also impacted bond markets. The general expectation is that tariff policies could drive inflation. Further, the US Federal Reserve signaled a reduction in the number of interest rate cuts that they expect this year, and they lowered this forecast from about 5 cuts to 2. US bond yields rose as a result, and bond prices fell. Consequently, the Fortress High Interest Fund and the World Fixed Income Fund declined by 1% and 3% respectively. Higher prices of Government of Barbados bonds contributed positively to the High Interest Fund this quarter. So that is why the High Interest Fund performed a little better than the World Fixed Income Fund. As for our outlook, we are even more optimistic on the return potential for non-US stocks. These stocks have good fundamentals, are even cheaper now, and we expect international currencies to be a tailwind this year instead of a headwind. In the Caribbean, a few of our Trinidad holdings look like they are priced for good long-term returns, and this is after they were beaten down last year. As for bonds, yields at these levels give us another opportunity to add bonds cheaply and earn high coupon income, and this is even amid the risk of higher inflation. And that's it for me.